The chief executive of Delex Finance, Ken Thompson, has described the rate cuts by the Bank of Ghana as not enough to deal with the liquidity challenges in the banking and non-banking sectors. Now, in a surprise move last week, the Monetary Policy Committee of the Bank of Ghana cut its policy rate by 150 basis points to 14.50% from 16% in a bid to support the economy by signaling a lowering of rates so businesses can borrow at better rates. But Mr. Thompson believes this will only affect the banks and exclude other players such as the specialized deposit-taking institutions. He spoke to Joy Business's Philip Namfori.
Unfortunately, our central bank is in a bit of a tight spot, especially since we're coming just out of money being provided to support financial institutions that collapsed. So it's not able to do as much as probably it should. And I don't think those that are there are not mindful of the things that need to do. Because what we need is liquidity. So unless you provide liquidity, you haven't started. I mean, let's go through some of the things they've tried to do. They've reduced the monetary policy rate. That monetary policy rate has no bearing on real interest rates. The government itself is borrowing at about 20%. So at the worst possible case, I'll give my money to the government. They've reduced some reserves that the commercial banks are allowed to hold. So technically, the commercial banks have more money to lend. Commercial banks never lend to SMEs. They never will lend to my barber. They'll never lend to my watch seller. They won't. They never did. They will never will. They are not interested. They don't have the capacity to do it. So if really you want to lend to those people, then you need to write to institutions that are one step below.
Institutions like yours?
Yes, maybe finance companies, savings and loans companies, microfinance companies. That's, if you really want to help those at the bottom who are the most vulnerable, then that's where the money should go. But I also don't think that we have the infrastructure, you know, and we'll come to, I mean, while we are suffering from this a lot, we don't have the infrastructure to be able to transmit the money to the institutions and monitor. That's the problem. So the central bank's in the bind. A, it doesn't have a lot of money. B, there's no infrastructure to do it. Who do you give it to? How do you track them? Who are they? We don't even have an ID system. We don't have an address system. You take a case to court, it takes 5, I've got cases in court that have taken 7 years. 7 years in court! And of course you're going to suffer for it. So they are trying, but coming off the back of this banking crisis, where they have to provide liquidity, on top of this, it's a problem. What the economy needs is liquidity. If you take economies all over the world, and of course, we've got to use example what people have done. It's, in some countries, they're actually paying up to 80% of the wages of vulnerable employees. In America, they're going to as far as giving everybody $1,000 check. Why? They want to make people spend. That's the challenge. That is a challenge. Or, you know, you pump money into the system. But unless you provide liquidity, it's a non-starter.